The 7th of April 2026 will mean a terminal tax payment for some business owners in New Zealand. So for some very simple context to help you understand taxes, if you've paid provisional tax throughout the year, you are paying tax as you go effectively. Now, this is typically based on the profit you had in the prior financial year. And so the IRD is saying we want you to pay based on that with a small uplift so that you're paying some as you go and they don't run the risk that you spend all of the tax money on equipment in the business, drawings, or overseas trips. So they're asking for it normally in 3 installments: August, January, and May. Now, the provisional tax that you pay is obviously based on the prior year, not the current financial year. So it could mean that you have a shortfall of tax to pay. And that would typically then be the terminal tax that you have to pay the year later. So we go into a lot more detail of this in a recent podcast around terminal tax, so make sure you check that out if you really want to understand it with some more examples. But the terminal tax that would be due in April 2026 is the leftover tax that you have to pay for the 2025 financial year, which finished 31 March 2025. I know I'm throwing around a lot of dates here, but hopefully you can follow along. So in that 2025 financial year, if we step through this, you most likely paid provisional tax in August, January, and then May, based on the profitability of 2024. Now, if those provisional tax payments weren't enough, then you'd end up with terminal tax to pay in April 2026. So business owners get a little bit of grace here where they get given a bit of time to be able to pay that terminal tax. So some of our clients like to just clear that terminal tax if they have it to pay, if they haven't cleared it via provisional tax throughout the year, so that it's gone and it's out of the way and they focus on carrying on with their business. Whereas some people like to hold on to that very last date before they pay their terminal tax, and everybody has got their own way to do this. So if you want to check if you've got terminal tax that is owing, probably check with your accountant, but you could also log into your MyIR. Make sure you check yourself individually and your associated entities. So it might be your partner, or it could be your business or your trust. You want to make sure that you're across those tax payments that are due as terminal tax in April 2026. Because if you don't pay them, then you could end up with a penalty and then interest on the non-payment of that. So there's a couple of options also if you can't afford to pay them, and one would be to get in touch with the IRD ahead of that due date and tell them that you're going to struggle to make that payment and see what options they have for you. They want to see taxpayers being proactive and providing or looking at solutions alongside them rather than getting overdue and then waiting for the IRD to reach out to them. And you say, oh, sorry, I didn't realize that was happening. So you want to create a good file note at their end where you're actively engaging and being proactive and showing, hey, I'm not sure we're going to be able to make this. What are my options? And they'll probably suggest an installment arrangement where you would pay it off over time, and hopefully that helps you avoid penalties. Now, outside of that, you might want to use something like tax pooling, which allows you to buy the payment as if you did pay it on the correct due date. So I think you've got right until maybe early or middle of June to use tax pooling, the likes of Tax Traders and Google tax pooling in New Zealand. You'll find that there are options to pay your tax if you've missed the due date. You can still buy it as if you did pay on the correct due date. You use the tax intermediary, you buy their credits off of them, they apply them to your account. So this helps you avoid any late payment penalties, which you really want to avoid because A, they're not tax deductible, and B, they are expensive. So a very simple reminder that terminal tax is coming up for New Zealand business owners out there who have a 31 March balance date. Again, a reminder to step you through it. Terminal tax is normally the tax that is due on the profits remaining in the business that you haven't already paid tax on. So a specific example as well for one of the earlier businesses out there. Let's say that in 2024 you started trading and you had a small profit and therefore you paid your tax on that as terminal tax. You would have paid that in April 2025. Then in your 2025 financial year, you really start to ramp that up and you have a full year in business and you're a lot more profitable. Now the IRD aren't going to know how profitable you were until you finalize your tax return. So when you file that tax return, they're going to say, oh, wow, okay, you are 100 grand of profit, let's say. Let's just use round numbers to make it simple. You've got $30,000 worth of tax that you need to pay. And they're going to say, we need you to pay that in April 2026. So there'll be some people out there that will have terminal tax to pay, and it's not uncommon. And I think if you can't make it, the key needs to be that you need to be looking for solutions because you don't want to be getting behind on your tax. IRD are increasingly looking at business owners less favorably who aren't engaging with them around their unpaid taxes. And you don't want to get those knocks on the door or a bit of pressure from their end to cover them. So perhaps check with your accountant. This is just a reminder for you, and also some education to help you understand tax and provisional tax more. If you want to have more detailed look at some of these examples, go and have a look at the podcast that we create around provisional tax and terminal tax, and start getting ready for the end of another financial year in New Zealand.